spoke to Manpreet Gill of Standard Chartered to get a perspective on emerging markets flows. What are the risks to India and how is India placed versus emerging markets? Let's listen in.
Within the region, look, I mean, there are obviously Asia's a very wide mix of economies, but I think India's strengths here are reasonably well buffered external balance. But I think in a volatile world, the strength of the domestic economy and the domestic orientation, that's definitely an advantage. And as regional investors, when you look across the landscape across in Asia, I think the diversified equity market portfolio and the strength of domestic demand and the domestic focus, that's always one of the key criteria when thinking about investing in Indian assets or in elsewhere in the region. So looking out the next 6 to 12 months, we do expect the dollar to turn lower. And again, if that relationship holds, that should mean we should see a turnaround in some of those flows. The last factor we're keeping in mind is that, look, we think we're late stage in the cycle, and that's a point when equity markets in the US and across Asia have historically done well. So unless this cycle is going to be quite different from previous ones, we'd question what would cause, the equity market returns and bond market returns indeed to be very different from the last one. That's why we're positive.